Welcome to Cigars and Taxes. My name is Stacey Smith, and this is my husband and business partner, Layton Smith. We are enrolled agents in New Jersey. We have an office, Smith Financial Services, where we've helped so many clients with tax issues, tax problems, really helping them with the anxiety and the worry with a plan. Doing that for the last couple decades. And today we have a topic that we're going to talk to you about that we had a question on. What if I can't pay my taxes on time?
That's a wonderful topic.
Isn't it?
So this is a true cigar lounge topic.
Absolutely.
So for many, many years, we work, we finish work, we go to cigar lounge, a lounge, and sitting back, we're having some smokes, drinks, and at some point, maybe about 2-3 hours in, it might be pushing 10 o'clock or so in the evening, we'd have somebody walk over to us that we've been talking to for the last year or so and go, IRS sent me a letter saying I owe $300,000. I only owed them like $5,000. I don't even know what the shit they're talking about. It's crazy. Yeah. And we'd just be sitting there like, Really? You only owe $5,000. They sent you a letter said you owe $300. So, this is a true dear to the heart conversation here.
It is.
We might wind up with more examples than actual stats here, but
oh no, I don't think we have time for all the examples. So
I know, right?
We're just going to go right into it.
But let's start with the house cleaning first. Thank you for joining us. We are financial advisors, but this is Cigars and Taxes. This show is meant for entertainment and education. All of the different theories, tax law, plans that we might speak of here, we encourage you to seek advice, talk to your financial advisors, make sure that the information that you're receiving from us, if you believe is applicable to you, you clear it with your financial advisors. Make sure that these are items that can help you. All right? Plus, we're drinking and smoking. So, with that being said, make sure that you check with your financial advisor on your own situation.
Yeah.
That's it. So.
Yeah, and honestly, once, just because a credit or deduction or method of dealing with a particular issue exists, it's there, it's possible, it's legitimate, it doesn't mean that it's particularly appropriate for your situation. So to Layton's point, you definitely want to check in.
And plus, we're talking about what do I do if I cannot pay my taxes?
Correct.
Okay. Yeah. So the first thing you got to understand here is we're talking about possibly being non-compliant. Yeah, you need to make sure that everything we're talking about is applicable to you, because
Yes.
we're going to probably talk about payment plans, offers, extensions on time to pay, stuff like that.
Yes.
And none of that applies to you if you're not compliant.
This is true.
That's the first step. All right. I didn't messed up the flow. So go ahead, jump in. In.
Well, I'm just going to start off by saying the first step is to make sure that you're filing your taxes on time. All right. Oftentimes, we'll run into clients who they'll come in and they have 3-4 years to file. And the issue is that first year that they didn't file, they had a feeling that they were going to owe. They did something, took out money, something was different so that they anticipated owing. And I think they pretty much looked at it and said, I'm going to wait. I'm going to wait until next year, and then I'll file the 2 years on time. And maybe the same thing happened the second year, or for whatever reason.
The third year, the fourth year,
Yes.
the fifth year.
Yes, for whatever reason, they never got into the point where they were ready to file until they finally came to see us. So the problem with that is you're still going to owe for that first year, but now you have interest and penalties that have accrued over that last 4 years that you didn't pay, or that you didn't file and didn't pay. So it's always best to try and file as soon as you can. And you know, because it's not going to, it's going to make things worse more than it's going to make things better. So, did you have anything to add to that?
So she's talking about being non-compliant. All right. So, you know, the general thought is this. What do I do if I can't pay my taxes? You still file your return. You still make yourself compliant, which means you filed the returns. So you're not compliant. You filed the returns, you didn't pay the taxes, but they are at least filed. So, you know, you're not going 2, 3, as you said, 4 or 5. Those are some of our extreme clients, but you're not going all of those years hiding. Okay. And you also got to understand just the nature of this. It's anxiety provoking, very stressful. Most times when we get our clients to come in, and I know we keep going back to these folks that ain't filed 2, 3, 4, 5 years. Let's just say you didn't file last year, and now you have to file this year. And 9 times out of 10, we'll have the husband come in because the wife is up his ass, okay, completely. All right,
That's a common scenario.
Yeah, did not file a return. She is completely afraid. She's like, they're going to come and take my house. They're going to make me move, you know, and you're sitting there looking stupid.
And don't let there have been a letter that came to the house saying, we didn't receive your tax return. That's it. Yes.
Or even better, we didn't receive your tax return, so we've compiled a return for you, and it looks like you owe about $500,000.
Yes.
And she picked that letter up and read it.
Yes.
After you told her you owed about 50.
Yes.
Oh my God. Oh my God.
Yes.
So the key is this. Most times they come in because, you know, they're worried, they can't sleep. More importantly, your spouse is worried, your spouse can't sleep, and it's causing fights and anxiety. You don't need that in your life. You can deal with these problems. You just got to deal with them head on. You know, just deal with it the same way you do everything else. Nothing's ever been easy. Everything's been a fight. It's just another fight. That's all. All right. Let's focus on how we deal with these folks. Wait. Before we do all that.
Yes.
Normally when they come up in the lounge and they ask us this particular question, I start off by taking a sip. So here we go. You're going to tip with me here.
Yes.
You know, we just got another one. Here we go.
Yeah.
We'll be sitting there thinking right there, ooh, new client. That's it. Wonderful stuff. So, housekeeping. You're smoking on what?
I'm smoking on a Sweet Jane.
Ah.
Today.
And what's
Another infused cigar.
And what's that clear stuff?
That is actually Ciroc red berries today.
It's not red though.
I know. That's okay.
Oh. So it's red berry, but it's clear.
It's sweet.
Okay, got you. All right.
That is the point.
All right. I'm going to hold us down. We have Balvenie 14 Caribbean cask here, and we have a My Father 1922 Le Bijou. Yes.
Okay.
So that's how we're going to start off this conversation. With a couple sips, a couple puffs, and a heart-to-heart conversation with this dude that just walked up to us at the bar in the lounge.
There you go.
Yes.
There you go.
With a letter that said he owes $300,000, but he only owed like 50.
Listen, when we're talking and we're on this show, the examples are the kicker. That's it.
This is true.
They just add so much color to the whole thing, just to help bring the whole thing to real life for you.
That's it.
So,
all right, how do you want to start this off?
well, I have a few basic things that we should talk about.
Okay.
You know, first thing is if you can't pay your taxes, the first thing to think about is an installment agreement. Okay, installment agreement is going to give you, in most cases, if you owe under $50,000, should give you an extra 72 months to pay. Now, that being said, you do have to have all of your returns filed up to date. None of the things that we're going to discuss will work. Okay, so we've just covered filing your tax returns and how that is step one. You got to be in compliance before anything else, before we can consider anything else. The second thing is installment agreements. And that basically is for you to be able to pay in monthly installments. IRS will set up these agreements. You can ask for an installment agreement where the IRS will accept monthly payments for your tax bill. You do need to be in compliance, meaning your last return, all your returns due to date have to have been filed.
Or an extension in.
Or an extension in. You have 72
And
months.
estimated payments.
And estimated payments if you are supposed to be making estimated payments. You do get 72 months. That's really the bare minimum payment. That would be the minimum payment that you'd have to make. I would say that we suggest never sticking with just the minimum payment, but it's a good start. It's better than not having it in place. One of the good things about having an installment agreement in place is that it makes it so that the IRS doesn't pursue more aggressive collection activity. As long as you are sticking to the installment agreement, you are making your payments on time, you're not going to have to worry about a wage garnishment. You're not going to have to worry about any levy to your bank or Social Security or anything else, as long as you are making those payments. Now, if you end up having a refund the next year, you're not getting that if you still owe. So that's about the only thing that they'll take. So that's a positive. And it's something good that you should think about if you owe and you can't pay right away.
You know, this is a charged conversation. So I want to take it back a step, okay? And let's deal with some of the things here. So we got somebody that walks up to us in a lounge. They owe the IRS some large or whatever, they just owe some amount of money that they cannot make payment and, full payment within a month or two. The first step is what you said, compliance. We need to make sure that all of their returns are filed and that they're currently compliant with estimated payments and such. The second thing is, and you were mentioning the 72 months. Now, that's that what you hear everybody else talking about. Fresh Start Initiative, Fresh Start Initiative. You have all these ads on the radio and on TV. The IRS just started this Fresh Start Initiative. Shit been going on for like 10 years.
Yes,
but it's brand
literally.
new. Every time you hear it on the radio, it's brand new. Anyway, just a point of reference. Fresh Start is not new. It's always been around, okay? What Stacey's referring to with taking 60 months or 72 months is basically you take the total liability that you owe, okay? Divide that by the 60 months or the 72 months, and that is that minimum payment. As long as you can make that minimum payment, you are guaranteed, and it's under 50,000, you are on a guaranteed plan, okay? If it is more than the 50, and or you
different.
cannot make the minimum amount that needs to be paid in that 60 or 72 months is too much for your monthly budget. So let's just say your minimum payment comes up to $2,400 a month, and you're like, bruh, I ain't got $2,400 a month to throw. Okay, well, now we're in a different phase here. Now what we must do is we have to fill out forms 433A, financials for an individual, 433B, financials for a business or entity. And, on these financials, it shows the total revenue that you bring in a month, all of your expenses that you have, and understand, we're not going to get into the 433A and B terribly deep right now, but let's just say, you're not given the total amount of all of your expenses. So let's just say Cardinal. Let's say you're driving around in a leased Bugatti. Okay, let's not even do that. Let's just say you're driving around in a vehicle.
Of all things, that's what you
Right. Let's just say you're driving around
Wow.
in a vehicle and the monthly payment is $2,000. Well, they have, federal standards on how much you will be giving for your monthly car payment. Let's just say hypothetically it's maximum $400. You don't get the $2,000. You get that amount, okay? So we come up with your financials, and when I'm saying this to say, we've had plenty of people come to us and go, oh, you can look at what I make a month, and then you look at all of my expenses, and you look at all the family I take care of, and I'm negative. And it's like, okay, well, all those other family members you're taking care of, they're not dependents. That's not considered, okay? Just because, you have a helicopter and you have a monthly note on that, that's not deductible, okay?
And the other maintenance required for it.
That's
yeah.
it. You have 4 vehicles and you have a note on all 4 vehicles.
Yeah.
It's going to get capped.
There's a cap.
That's it. So basically, we have to fill out the 433A and B, come up with your revenue, your expenses, and your, open, free, unallocated revenue that you have, net income that you have on a monthly basis. And that is what is considered as your payment. That can be considered as your payment going forward. Now at that point, you're not on a basic installment. You're not on a fresh start initiative installment. We would be looking at other items like maybe an extended installment arrangement or a partial pay installment arrangement. And then you jump into some of these. I don't want to jump too far here. I wanted to make clarity on how the installments work. I think I did that. Okay. And a wonderful example, well, I did mention partial pay installment. We had one gentleman, medical research gentleman, and he had contracts. Okay. Wasn't an employee anywhere, independent contractor. But we went through, I think he owed about $400,000 altogether, and we came up with a monthly amount that he would be on a partial pay installment arrangement. And I'm going to tell you, it was like $1,100 a month or something low like that. And over the course of this partial pay installment arrangement, he was going to pay in somewhere in the neighborhood of like $190,000. Okay.
Over how many years was that?
That was a 6. And basically, with that outlook, the other amount that he owed, that other 210, it was going to fall off due to statute of limitations. Now, that's not a given. I'm just giving you a situation here. He was on a partial pay installment. That particular plan, it has to be recertified yearly. It's never recertified yearly. Normally, it's every 2 years. But what that means is, if his income was to significantly increase or just increase the next year, that plan could be reworked to show, to show for the additional income that's coming in. Now, partial pay is supposed to be every year. Normally, we see them every 2 years, where we'll have the revenue agent officer reach back out to us and they want a new 433A for the client. But if you hit the lottery or you pick up another job, that plan, it's out the door. It's out the door. Okay. But it is a wonderful plan. If his income stayed the same for those number of years, he would have literally paid half of that liability, and the rest would have fallen off due to statute of limitations. Okay, so
I just wanted to mention that, more piggybacking on what you said, there's certain things that you can do that require those financials, that 433A, that 433B. And they're definitely more complicated. It's something you need to be looking at, particularly if you owe a little bit more. And if your income has significantly changed since when you first incurred that bill, there are a couple more things that may not require the financials. But
such as
the penalty abatement request.
Okay. I was wondering where you were going with that. All right.
Such as a penalty abatement request, and that it's pretty much what it sounds like.
Yeah.
Most cases, when you are late filing and or late paying, there's extra penalties that are incurred for that. So it increases whatever your tax bill was prior to those penalties. Now those are added on. There are times that you can ask to have them removed. And there's a first-time penalty abatement. There is also reasonable cause, which is a little more involved, but you can get that done. And I would say the IRS is, what would I say, semi-reasonable with a reasonable cause.
Semi-reasonable with a reasonable cause. Oh Lord. Okay, that's good.
Yeah, I mean, it needs to be. I would talk to your tax accountant about it as opposed to just writing in and asking. I would recommend that.
Don't just write the letter and mail it in.
Yes, don't do that.
Okay.
Don't just say, I'm broke. Here, can you please abate these penalties? That is not going to work. You can't. That's not going to work.
So the way we normally handle penalty abatement. So let's just focus penalty abatement. That's what Stacey is referring to right now. And you have a few. You have your first-time penalty abatement. You have the reasonable cause penalty abatement. All right. So let's do a little bit of a deep dive into these penalty abatements, okay?
Sure.
So you have your first time penalty abatement, which is exactly how it sounds. First time penalty abatement. All right. You have your reasonable cause penalty abatement, which some is you were given bad advice. Actually, you've done reasonable cause with sicknesses too before penalty abatements you have here.
Yep.
Penalty abatements is Stacey thing. All right. You have your hardship penalty abatements.
Yes.
That falls under reasonable cause also.
Oh, that falls
Right.
under reasonable cause.
And COVID penalty abatements.
Reasonable cause.
There we go. Okay, so the way we normally handle penalty abatements is we do not request. So let's just say you owe $70,000 and 20 of that is penalty. Okay, let's just say 70 is penalty and interest. And then we can have the penalty portion of it abated. We don't request that immediately, not normally, okay? What we will normally do is we will set up the payment arrangement and have you make 1 to 3 payments, at least 2 payments, 2 to 3 payments. And then after that, we will send in the request for penalty abatement, all right? Normally what happens is if you go to request, now you can do the first time penalty abatement before an
Without doing
installment.
that, right.
That'll be given. That's like, boom, it's given. There's no problem. But if you jump into the reasonable cause penalty abatements, all right, my experience. Now, like I said, Stacey does most of these, all right, so I'll defer. But from what I know, our clients, a lot of times if you request for a reasonable cause penalty abatement before the installment is in place or right after the installment or as you're putting in the installment, it's not granted.
Right.
It's not granted, or it's delayed for one reason or another.
Right.
But normally, the penalty abatement, what we do is we will file the installment, get the installment in place. We'll wait 2 to 3 months, and then we will put in a request for the penalty abatement reasonable causes. And with that, normally we don't have a problem with having a nice chunk taken off that bill. All right. So that's the penalty abatements. I think that's pretty much all that as far as I'm thinking that's
pretty
it
much
there.
it. The other options for what you could, so there's one other which people sometimes decide, I have listed your future refunds. So you may have a balance due now, and it may be that you had a certain situation over the last 2-3 years, but you anticipate having refunds over the next few years. Maybe your family size changed or you got married or what have you, but you're anticipating having refunds. So sometimes people will, just talk it over with us that, hey, let the IRS take my refunds for the next couple of years. That's going to be easier for me than me staying on an installment agreement or what have you. My personal communication to that, my response to that is keep the installment agreement because you need that so they don't start digging into your account or communicating with your employer. You don't want that. But yes, they are going to take your refunds, and a lot of times that will put a bigger chunk in terms of a payment towards your balance due than what you might be doing month to month, over time.
Right. But let's put some clarity around this. When you are non-compliant, which means you're not on an installment arrangement, okay, you will not be given penalty abatements. So for the folks that run in and they're like, all right, I don't know about doing on monthly payments, but I'm going to have refunds over the next 7 years. Let them just take that every year. Okay, well, you're going to have penalties accruing over the next 7 years also.
You will.
All right, that can tremendously offset whatever that refund is. So, let's just say, let's do easy math. You owe $10,000 and you're like, I'm going to get $2,000 a year in a refund for the next 5 years. It'll be paid off in 5 years. Well, you're also going to have penalties accruing for non-payment, non-filing payment, not making, well, you wouldn't have not making estimated payments.
Yes.
But the penalties that you could accrue, it won't offset the complete refund, but it's going to add to it. So it might not be, this will be paid off in 5 years. Okay.
Yes, so your $10,000 bill that you had initially is going to be growing as you're paying it.
Yes.
That's basically
it. So you have to be compliant. You need to be on a payment arrangement. That's not an answer. Just allow them to take the refunds. Because you could hit a year where you don't have a refund.
You thought you were going to have a refund.
That's it.
It didn't work out.
Right.
Yes.
So we don't really play around with that conversation with our folks too much. We get it. They kick it out there and it's like, yeah, no. All right, we need to put a plan in place. Let's just figure out what the minimum is that you can pay to stay compliant, and then we can deal with penalties, abatements, and other tax planning to, alleviate this debt. So.
And then their refund, if they do get it, it's just gravy on top.
So here's the other thing. Got to remember, you owe the IRS $10, $50, $300, and you actually made more in estimated payments than what you were supposed to, so you got a $8,000 refund. You're not going to get that refund. That refund is going to be applied towards your debt. All right, there we go. All right, perfect. So
the next couple items that I had were all the currently not collectible offers, and I actually had the partial pay in there too. But
the partial pay that I just stomped all over?
Yes. Well, the thing is, all of those require financials. They require the 433A and B. It is not, and I would like to mention, because I actually did have a client say to me that, hey, I know I owe $50,000, but I have 40 right now, so I'm just going to go down there and tell them, well, I got 40 in cash. How about you just take this and we wipe it clean? And I very nicely
you're going to go down there,
explained to
you're going
her,
to give them 40, and they're going to send you a bill for 10.
That's pretty much what's going to happen. I said, that doesn't work like that. That is, that's a different scenario, not the tax / IRS / state tax scenario. It doesn't work like that. If you are paying less and you are making a plea to pay less, you have to show financials to show that you cannot pay more than that. And what they will do, like you said, they will say, oh, okay, great, we'll take that 40,000, and what kind of plan do you want to be on for the remaining 10?
That's it.
And that's it.
This is not, you're not going down, you're not going to a swap meet
and
negotiating.
Right.
It don't work that way.
Yes.
All right, so,
I thought it was worth mentioning.
Yes, that was good. That was good. That's a real life example.
It is.
The best way that we can, what you're hearing from us right now is client stories.
Yes.
Yeah, not just, the technical, the book piece, but the client story. So, offers and compromise, because I know that's what everybody's thinking. All right, well, I'm doing offer. Please hear me. The shit you hear on TV, I owed the IRS $200,000, and they took $415 and wiped the whole rest clean. Bullshit. Bullshit.
Who say it's not? It's
okay,
impossible.
I'll give you an example of when that could happen.
There you go.
So let's say you are on your deathbed and there is no estate and you have $415 in the bank account and you got about 4 days to live. I will take that $415.
No, you did. I'm sorry.
They'll take it. Yes, they will take it at that point. Okay, if you are in a situation, you guys will hear more about us in time. But for me, I was in a car accident a little over a year ago. So I am a burn survivor and an amputee. Okay, and if I wanted to roll into the IRS right now and go, listen, I know I owe about $212,000, but I was burnt to shit and I'm missing a foot. How about I just give you about $75? They would go, well, your hands and your fingers still work and look like you're thinking the same, so you can still work, right?
Yeah.
As I was just saying, the big thing is, even if you take someone like myself, who burn survivor, amputee, there's not a guarantee that because of these injuries, I can get pennies on a dollar. It doesn't work that way. You have 3 offers and compromises, but the primary 2 is offer and compromise, which is doubt to liability, and that primarily, and we're going to do a whole episode on this, all right? But doubt to liability is mostly when you have someone who had an audit and the audit just went wrong, or you didn't show up for the audit.
Yeah, that's more often what it is.
Okay,
Yeah.
and you're doing an offer because there's a doubt to the liability. You doubt that you owe that because, then there's also doubt to collectability.
Right.
Which could fall for someone who they are not working currently, or they're displaced in their industry, or their earning capacity has been diminished. Maybe someone that might fall into more of a my realm there.
We've seen multiple clients that we've had that have had some injury. They might have been self-employed. Now, the injury has made it so that they cannot work.
Yes.
That actually is a
Right.
decent case for us.
But I will be honest. Let's just say, for example, I'm using myself, for example. Say I owe the IRS a few $100,000 and I'm like, oh, I've been burnt to shit and lost my foot. I guarantee they would not approve me on an offer and compromise doubt to collectability. What they would do is they would make me currently not collectible, and they'd want to take a look at this again next year and see how I'm doing.
Which is another one of our options.
That's currently not collectible. Yes, which means you're just pushing that forward to a better financial position, a different year.
And they assess that every 2
Yeah.
years? Year.
It's supposed to be yearly.
Okay.
Yes.
I think I've seen it 2 years more
That's
often
it.
now.
So I think we gave a decent high-level overview of offers.
Right.
All right.
Right.
What else you got?
That
We'll have a whole show on offers, guys. We will have a whole show on just offers.
That's pretty much it. There's some other tips. I think we've actually covered everything else. You do need to check in with your tax accountant. None of these things should you be doing on your own. Okay, and just from our perspective, the intricacies that are involved and how your situation applies, and how the different different options may apply to your situation, you would want to talk to someone about that before just moving forward.
Yeah.
Okay.
Because even when we have clients come in the office, to be honest with you, we don't have a plan as soon as they walk in the office.
No.
What happens is they come in, they give us their story, we give a power of attorney, and we pull transcripts, and then we see the other side of the story.
Right.
Okay. And over time, as we're looking at the situation, we come up with a plan.
Yes.
And, having a team around you can be invaluable. You need that. So let's come to a bit of a conclusion with this. What to do if you can't pay your taxes? 1, be compliant. File all of your returns. Be in compliance. Make your estimated payments. Now, you have a liability there and you can't pay, you always have the option of the basic installments, fresh start initiative installments. You can run into a partial pay installment. You can start looking at offers. If you're in financial situation where you can't make any payment, you can go on currently not collectible. There's tons of options out there for you. Right.
Can I interject one
Sure.
other thing? You can also ask for an extension of time to pay. They will give you an extra 120 days, up to 120 days. So there is that too. That's similar to installment agreement, but not exactly. Okay.
That's it. So in 120 days, that's wonderful.
It is.
Yeah. I owe about $600,000. I don't have it right now, but in 120 days,
You listen.
We're gonna do
if
this.
you owe $600,000, it is possible that something you may be doing in terms of a transaction or a deal may go through in 120 days.
Ladies and gentlemen, is 27 years of marriage right here, because always glass half full.
Why wouldn't it be?
I'm glass half empty.
I know.
600 grand?
27 years.
I know, 600 grand?
Yeah.
You gonna give me an extra 90 days to figure it out? Okay.
Sometimes that's all it takes.
Sometimes.
Sometimes. Now,
I'm going.
anyway, in any
But
case.
what we will do is we will make sure that we treat you the same way we treat our own family. You won't be in that position where you got 90 days to come up with a little over $500,000.
No. I mean, hey, These are all options. It makes sense to choose what's going to work for you, okay? And to know the ins and outs of each one, and to know if there are any downsides or consequences to each. Knowledge is power. If you can have the information, you'll be better equipped to make the right decision, or a decision that works best for you. And that's it.
She's so adorable.
Okay.
All right.
All
So
right.
that's it for today's episode. But
Okay.
we'll put in the links below. Definitely need to talk about offers more deeply.
Yes, we will have I think we're going to do one on offers. I think we had it so offers is by itself. So
Yeah.
we'll probably touch again on currently not collectible.
True.
And partial pay installments.
Yeah.
It makes sense.
Those are 3 different shows altogether, to be honest with you.
Yes.
We could spend 20 minutes or half hour on
We
each
could,
one.
absolutely.
Very easy.
All right, thanks for joining us today for our discussion on what to do when you can't pay your taxes on time. We talked about a few options, from making sure that you file on time so that you can stay compliant, to an installment agreement that you can ask for. There's different types of installment agreements. We touched on the normal regular 72-month installment agreement, but there's also partial pay. We will be doing another show soon to go into more detail about some of the other options. We did talk about offer and compromise, and again, high level, we really need a whole show to kind of do a deep dive into that for you.
So, your problems are not going to go away.
No.
Stop hiding. Pull that rock from over your head and look out, okay? You just need a team around you. So, you have a team. You can deal with the problems that's in front of you. You owe the IRS, you owe the state. There's ways to mitigate those particular problems.
Yes.
You just need to look at those. But avoidance, tax avoidance, or ignoring it, that never works.
Is not going to help. No.
Because what happens when you just ignore it is, today is Wednesday. You're paying all your employees on Friday. They're going to pull the direct deposit from your account today on Wednesday, and your business and payroll accounts just got hit for like $230,000.
Or the funds are frozen.
Well, they're always frozen. They're frozen for 14 days. Your bank holds them for 14 days until they send them over to the agency, the IRS or the state.
Right.
But all that being said and done, that's not a way to deal with this.
No.
So jump in front of it. Jump right in front of it.
Yes.
Yeah. So outside of that, like we said earlier, these conversations are entertaining. Hopefully you had something to smoke and a drink while you were listening. And education, but you should definitely talk to your financial advisor and come up with a plan to deal with those issues. Take some of the topics that we mentioned today back to them, see how they apply to you, if it can be utilized, and there you go.
If you enjoy the show, please give us a comment below and subscribe. Also, our contact information is listed, so if you're going to reach out to us, definitely do so. All right?
Thanks, guys.
Thanks for joining us. Have a good one.
See ya.